Hey, my name's James Nicholson and welcome to my YouTube channel. Now, this channel is all about property investing. We make new content every single day. We're the only channel that does that in the UK, and I'd like to invite you to join us on this journey together because there's a hell of a lot of stuff happening in 2023. So you want to keep the greatest, latest knowledge so you can be an informed investor. So take that finger of power, smash that subscribe button and hit the bell notification so you get notified of all the new content. Now, I want to talk today about how far are prices going to drop in 2023. Now, we've done quite a bit of content on this, and I want to say, first and foremost, I don't know for certain how far the market is going to drop, and you don't know for certain either. But what I want to talk about is just gather some of that evidence together. What's happened historically, what might stop the market going down as much as some people think, and just present that to you in a way to make you make an informed decision, and then let you decide, should you be investing in 2023 while all this crazy stuff is going on. So 2022 was an absolute roller coaster. I mean, the prices just shot up at the beginning of the year, and then things suddenly turned. Now, we had inflation through the pandemic, but we didn't really start talking about it in the media until the beginning of 2022, or it wasn't as spoken as widely about as much as it has been recently. So inflation hit 11.1% at one stage in 2022, which is the highest it's been since the 1970s. Now, that's not good for just general people, because that means everything that you buy on average is 11.1% more expensive. Now, you haven't necessarily had a pay rise to that level. Some people did, but most didn't. That means that effectively you're actually worse off than you were at the beginning of that year, which is not great. Now, inflation hopefully peaked. It did go down to around 10%. And there are some indicators that inflation, the worst of it is behind us, but no one can be certain, because maybe they untighten monetary policy, they drop the interest rates a bit too soon, and then suddenly it starts shooting up again. We can't be certain what is going to happen, but let's just hope that that is on the back end. I mean, some of the gas prices I was reading the other day are similar to the the Ukrainian war, which is hopefully a good thing, and that will feed into the prices that we get later on this year. So that's a positive thing. So inflation was at highs. That meant that interest rates had to go up, and the interest rates normally go up in order to bring down that inflation. And so historically, interest rates have been a lot higher than we've had in the last few years. We've been very, very lucky in the last few years at the cheap borrowing costs that we've had. That's over now. And so rates at the moment are at 3.5%. And more than likely, the Bank of England base rate is going to peak out at 4.5% by the end of the year. That makes a big difference for you as an investor. So as a buy-to-let landlord, I've got some deals that are sitting there at 1%. And those deals potentially on renewal could be going 5-6 times more the payments. Now, there is a lot of margin in those at the moment. I've got equity in them, but that's going to be a shock for a lot of people, isn't it? And that is really going to be something that could drive prices down. Now, we've had 4 months of consecutive drops in house prices at the moment. A couple of them have been nothing really, 0.1%, but we've had a 2.5%, we've had a 1.5%. They're pretty big drops. And the market has a massive lag. It takes around 6 months to buy a house. And so we're not really going to see until Easter what the market is really up to at the moment. But we have had those back-to-back drops. Now, analysts have said house prices might drop as much as 30%. Oh, we've got a lot of numbers on here, right? But Nationwide have said they're one of the biggest lenders. And remember, they've got data on how many people are in arrears, and they can see, are people affording to keep up with their mortgage payments? They're thinking that we might just have a soft landing, which will be 5 to 10% drop. Now, that's difficult for a lot of people to stomach. Nobody likes their asset. The main net worth asset that they have for most people is their property. No one really wants to see that drop. So what's happened in the market since? Well, a lot of transactions have just stopped. So a lot of buyers pulled out the market. A lot of sellers pulled out the market as well. And so there's a lot less transactions happening at the moment. So what will happen is those people that need to sell, that must sell, they will be selling in the market, and they will take offers because they need the cash for whatever reason, maybe to stop repossession, maybe to buy another property, maybe to fund a business, maybe because of something called Section 24, where they get absolutely annihilated by tax, that they need to sell the property before they just have it as a liability, as a cost to them. So there's tons of different things that are going on, and the market could go down 5% more, it could go down 30%. No one knows for sure. But investors do know one thing, and that is that good deals are there whatever happens in the market. There are buyers that need to sell. There are buyers that need to sell right now that will knock off 20% off the price in order for you to take that purchase on. And as an investor, you've always got to be looking at properties that you can add value. So deals that aren't going to be particularly great are things like new builds, because a new build is often priced and then will drop in price temporarily for a few years because there is a cost of that timber and building and all these things and the marketing, and they take a while to recover. And that's always been the case. So what you want to be looking at is, can you buy a 2-bedroom house and convert it into a 3-bedroom house? Can you buy somewhere from an auction that's distressed, that needs some love and attention, and turn that property into a beautiful family home? Those deals are going to work whatever happens in the market. There's more money around because we printed so much money than ever before. And there's investors sitting there with money in the bank, losing money because it's being eroded by inflation. And if you can get a deal and you can add some value to the deal, you can buy it 10, 20% below market value, and then you can create an uplift in value by 15 or 20% by giving it some love and attention, by putting an extension on it, by adding a new kitchen, adding a new bathroom, by renovating that property, then you're covered whether the market drops 30% or not. Now, the market will come back at some point, and if you can make that deal work at today's interest rates and you can lock in a rate to give you predictability, then you know that you're going to make cash flow through these difficult times. And the people that get great deals in this sort of market are the ones that ultimately will come out super successful. But you've got to go in with an air of caution. You can't be buying below, above market value, or even at today's market value. You've got to be looking for deals that have that discount in there. Now, I've been looking at auctions in the last few weeks, and that's where I'm going into now. So I'm currently doing some remortgages to release some equity from the properties that I've got to get a pot of cash there. And I'm going shopping at the auctions because they are already down 20-25%. So if I buy from an auction and it's 25% lower than the market value, then I'm not really concerned whether it goes down 30%, because everything that I buy at auction is an ugly house anyway, where I'm going to add 10, 15 or 20% in value. So I'm going to make the deal work. That's the important thing, not whether the house prices go up or down. It's how long you're in the deal for. I buy and hold for the long term. House prices are going to continue to rise. We might have a temporary reset. We might have a crash. You don't know that. I don't know that. But what I do know is if I can buy a property below market value at an interest rate that I can fix, that I know that gives me cash flow of 200, 300, or if I turn it into a HMO, £1,000 or £2,000 profit each and every month, then why wouldn't you be doing those deals? Why would you be waiting? Because the opportunity is now. For the last 2 years, when the market's been going up, we've been fighting to get deals. It's been really, really difficult to find good deals because tons of people were bidding on them. And prices inevitably went up because of these bidding wars. So the market is going to go down. The answer is nobody knows how far it is going to go down. But this could be the biggest opportunity to go and grab some deals. A lot of you watching this channel are saying the market's going to crash. Great. Go and get some deals. go and get some property for cheap. That's a great opportunity for you. Let me know your thoughts on this. Do like this video, guys. Subscribe and hit the bell. We're going to be running some training in the next few days, so I'm going to pin a comment here where you can register to get some training, because there are ultimately tons of strategies you can use without investing with other people's money or rent to rent, or all these different strategies that are going to work in the market regardless of whether the market's going up or down. So do register for that training and come and join us. Do check out all the other content on my channel, including this video right here. Bye for now.